NRG is one of the top performers in the S&P 500 this year, propelled in part by what some analysts called a transformational deal to buy some gas-fired power plants. We continue to highlight companies whose stocks are at or near records, outperforming amid the year's volatility, what we're calling the why behind the high. We'd like to welcome in Larry Coben, CEO of NRG, who's here with us in the studio. Thank you so much for being here.
Thank you for having me.
So you guys are, broad strokes, a power company. As I mentioned, you're buying, I believe it's 18 gas-fired power plants from a company called LS Power. So you have power generation assets, you've got sort of a smart home asset as well, and there's some other bibs and bobs there. Talk to me about the portfolio and how it sort of all fits together.
Sure, the portfolio is really one that lets us reach customers from the residential to the largest commercial and industrial companies or some of the new hyperscaler data centers that everybody's been talking about. Our view is that we're here to provide your energy and related solutions, which can, electricity, natural gas, home security, smart home, and we can provide customized solutions to you, whether you own a house in Houston or you're Amazon or Meta or one of the large hyperscalers with a data center, you're a large chemical or semiconductor plant like Samsung is building in Dallas. All of those are possible for us to supply through this strategy.
And so specifically when you're talking about the smart home and how it relates to the rest of it, I guess my question is, why does it make sense to have all of these assets under one roof? What does it do for you guys?
What it does, we already had the largest residential home energy business in Texas through our various brands there, as well as more than 3 million homes in Texas, another 3 million here in the Northeast. And what it does is it enables us to provide more and better services to those customers. So with one app, when I installed a Vivint system, which is the company that we bought, I had 6 apps on my phone. I now have 1. And it controls everything for me in incredible ways. My energy, my heating, it lets me control my air conditioning, car charging, garage door, and a slew of other things. I'm sure I'm leaving things out. So the idea was to have these integrated platforms that would enable us to have enhanced customer services at great and efficient prices.
So let's talk about the LS deal, because as I said, that was one that was viewed as a big deal. Your stock went up something like 25% in one day. So that's part of what's powered it to a record, but it was up even before that this year. So when does that close? And again, how does that sort of fit in? I know it also is going to provide a big boost for your numbers going forward.
Sure. Look, the LS Power deal was really a great combination of the assets that we owned and that LS owned. It enables us to provide customized solutions to more customers for extended periods of time. As people look at uncertainty in the world out there, they're starting to think about, maybe I don't want to buy my electricity on the weekly or the monthly price. I want to lock it in for 5 to 10 years. With power plants and our gas businesses, we have the largest natural gas commercial and industrial business in the country and the second largest commercial industrial electricity business. We can lock in your energy requirements for years. You decide how much risk you want to take. We can give you advice as to what we think the appropriate level of risk is and how to price that, and the final decision can be yours. So this transaction actually doubled our generation fleet, which was very exciting, provided us far more physical assets here in the Northeast, particularly in the PJM region.
Which is the big grid that operates here in the Northeast.
The big grid that operates here in the Northeast, 13 states plus the District of Columbia. And the transaction was also extraordinarily, not only strategic, accretive. We were able to raise our EPS growth rate from a CAGR of 10% up to 14%, and not by assuming anything about price increases in the market, not assuming any data centers, not assuming any synergies or collateral advantages, all of which are part of this deal. So it was an extraordinarily attractive transaction. When you can combine the strategic with the accretive, obviously that's the best of both worlds.
You mentioned data centers, and I want to dig in there a little bit, because one of the things that's causing a lot of excitement in your industry are so-called front-of-the-meter deals between data center operators and power generation companies, where basically you make a deal, you or whoever makes a deal with one of these hyperscalers to sell them power at a price that is not a regulated price. So you negotiate a different deal.
Correct.
What's anything planned on that front?
We're going to have a very fulsome update on our second quarter earnings call, which we've promised all of our investors. And so I'm going to have to wait until then to provide you the inside scoop. I'm happy to come back then and talk to you about it as much as you want. But Look, this is a huge market. There have been a couple of very large deals announced in the last couple of days. One, by Talon and Amazon and Constellation and Meta, great deals. And I think what that shows is, it's interesting, when there's not a data center deal announced for a month or two, people think data centers aren't real anymore. I think after this week, people realize, yeah, they're real. These are very complex transactions. We've been actually thinking about doing a webinar to explain how complex they are, but we're super excited about our data center strategy. The assets that we purchased from LS will allow us to have a much broader and more interesting menu for hyperscalers and other data center providers, as well as other large load users. We don't want to lose sight of big industrials and onshoring of manufacturing. So we're super excited about our prospects.
The last thing I want to ask you about has to do with your derivatives trading business, because the Wall Street Journal, I'm sure you've seen, has come out with a couple stories yesterday, sort of asking questions about that business and how the accounting around it works. And I wanted to give you the opportunity to respond to that.
Look, we talked to the reporter. Derivative accounting is complex and some people just don't understand it. Our investors and our stakeholders and our auditors have all looked at it numerous times. This is right down the middle. It's what every one of our competitors does. None of them are concerned about it in the least. We're not really getting any inbounds at all. They're kind of wondering why somebody is writing these articles, because it doesn't seem to have a complete understanding of what derivative accounting, how it works in our industry.
I guess I should ask, how big of your business, how big a part of your business is the derivatives trading?
It's not really, we don't really do derivatives trading. What we do is we position portfolios for people. If we know that we have to sell you power in 3 years, we'll buy a derivative to make sure we have the power in 3 years. We are doing far less of the speculative derivative trading than anybody in the space. We do take some positions, but others take far more than we do. So I'm kind of confused by the articles, but I'm not concerned about them.
Larry, thank you so much for being here.
Thank you for having me.
Nice to see you
Appreciate
and meet you
it.
in person. Appreciate it.
You too. Thank you.